Welcome to my YouTube channel. Today I'm going to be going over the weekly trade recap from this week, all the trades that I took between January 5th to the 9th of 2026. All right, let's get into it. Each trade we're going to look at, we're going to have these three criteria and we're going to go over them. What was the daily bias for me, why I took this trade, and what did I learn from this? On this specific trade, I had a process before that I had forgot about that I had saw on Monday and then started implementing it later on. So what was my bias? My bias was looking for shorts because we had a large opening range gap for the regular trading hour session. So in my mind, I'm looking for shorts to go down to at least the upper quadrant of it and potentially the consequent encroachment of that gap. So as we look here, we traded above the PM session high from Wednesday. We didn't necessarily show any displacement. So for me, displacement is shown in a fair value gap, which is not seen until here. This was the first presented fair value gap. When we traded below it, and on this candle, when I traded up into it a little bit deeper, I did take a short there. As you see, that's the arrow, that's my entry. And we had initial reaction like we want to see, but ultimately ended up coming up and stopping me out and ended up trading higher. That's why I entered the trade. I told you about my bias, and I'll tell you about what I learned. We're gonna go to the next page for that one. This was not a trade that I took, but this is a trade that I saw after I had closed my account and what I was looking for to happen in the morning session. Let me just break this down. My expected reversal zone area was around 10 to 11, and it occurred roughly at the 11:50 to 12:10 macro, right? Then we have the official breakdown, the gap being created, and we trade down. So this is what my journal entries look like, right? Obviously in the beginning, you have everything on there. I see there's a breaker. I know there's a whole bunch of things on there, but I'm doing what's relevant to me. When you're journaling, you need to mark out what makes sense to you, not what makes sense to ICT, your buddy or your pal. It's what you see in the chart because that's ultimately all that matters. And so we have the breakdown. It trades up into the gap, trades lower, breakaway gap, and then trades down to the upper quadrant again, and then trades down to the encroachment of this long wick that you see created there. That could have been a point of exit. So what did I learn on this exact trade? For me, it would be to not give up on the potential for that opportunity to trade lower, but also understanding that price cannot hide itself. When it is ready to break down, it'll be so clear that you'll know and see this. Because I saw this when it was breaking down and happening. I said, okay, it's going to happen now. It's going to break down. It's going to happen now. And that's exactly what we saw. And it was literally at this point, when it was trading back up into this, I remember saying that. And I also wrote that down in my notes. Now we're going to go over the trade from January 6th, 2026. What was the daily bias? Why I took this trade? What did I learn? You'll start to see a little shift in the process that I go through each and every day. Something I remembered going through my notes from years ago, literally 2 years ago. I went through my notes and was like, wow, I forgot I did this. I think that's why keeping notes is very important. So here, this is how I look at weekly profiling. So we have Monday, and we were trading. The day I was trading was Tuesday, right? So I was expecting or thinking that we were going to have a classic weekly expansion. That means that Monday creates the low of the week, and we're going to expect Tuesday to trade higher. That's my thought process because I was looking for buy. As we see on Tuesday, price trades higher, creates a little gap there. Ultimately, I wasn't in there. I was out way before then, but ends up taking out this high. So again, just weekly profiling. What are we expecting for the day? And then seeing that play out throughout the day. Why I had the basis of potentially it was even wanting to go higher was look how we're going below these lows right here. We have no candle bodies below these lows, and it's showing that it wants to go higher, right? It's not telling me that it wants to go lower. That's what I was looking for, and price ended up trading higher. So let's go to entry. Why I took this trade. Again, we had the understanding that price was showing bullishness and did not want to go lower. I was looking for higher prices. I did classic expansion model. There was an entry here, and I'll talk about that later. This is where I got in, and I took partials there and was ultimately looking for this right here, but didn't get that. So you see where it says take one off here. Since I had lost the day before, I had to trade with half, which is 2. I was trading with 4. And if I had another one, I would have taken one off here. If I had 3, I would have taken one off here, and then I would have got stopped out right below this suspension block right here. on this trade. Now, what did I learn in this specific trade? This entry right here was the one I wanted and was waiting for. On the 2-minute chart, there's a suspension block. Thank you to the person in the chat that told me what a suspension block was. I didn't know the terminology. I had just seen it, but I know what it is now. It's a fair value gap with a volume imbalance. One of my favorite entry models. I just didn't know ICT had a name for it. So this right here on the 2-minute chart, I didn't see the suspension block. This is a 1-minute chart, but on the 2-minute chart, more where I was looking because it combined all of these fair value gaps. So I wish I had a picture of that. But this traded down into a volume imbalance and didn't get low enough into the 2-minute fair value gap. What I could have done better was to recognize or see that 2-minute suspension block, and then I would have bought it right there. Same process would have happened though. Nothing else would have changed. So for January 7th, 2026, what was the daily bias, why I took this trade, and what did I learn? My weekly profile, classic expansion week. So Monday creates the low of the week or high of the week, but this instance I was looking for buys, so it would create the low. One of my friends was over and I said, we're gonna watch this fair value gap right here. It's not outlined here, but that's what I was looking at. If we're above it, that's gonna be the target. If we're below it, then we're probably gonna go a little bit lower, but I was looking for buy side and we'll see what happens. Go to the next chart. This fair value gap holds. We end up trading higher and ultimately to this buy side liquidity, which was the target. So that was my bias. That's what I was looking for. Now, why did I take this exact trade? Why did I get in here? I'm going to talk about that. So this high is the opening range high. So that's from 9:30 to 10 o'clock. So this is the 10 o'clock high from the previous day. Notice how we're consolidating around that. I found that very interesting. So this fair value, there's this line right here is a fair value gap that's below. So I thought price potentially could come a little bit lower. That's why I didn't buy here. If I trusted that we had some SMT or something down here and this wasn't too clean, this would have been the buy for me immediately. And I would have added, but I didn't trust this, so that's okay. So it came up, and when it traded down into this gap here, I ideally wanted this one, but since it came down to a discount, I bought it there, put my stop loss there, and was targeting this high, and ultimately took it all off right there. So that's why I took the trade. Right now, what did I learn in this trade? I learned that being patient is very important. And what I saw was my old version of myself, I would have tried to buy here just because it's a fair value gap, but it's a fair value gap in a premium market. I don't like buying those. I get hit with drawdown. So what I did was I took the fib from here to here and waited for it to come down to a discount, and I bought. And all of these trades will be, the timestamp will be put into this exact video so you can see it. I live stream every day from 9:10 a.m. EST to roughly about 11 or 12, depends on the day, or if I win pretty quickly. If you want to stop by, I'm here every day. I waited for it to come down to a discount, took partials, and then took it all up. It was a pretty quick trade, like 6 minutes or so. The January 8th, 2026 trade. What was my daily bias? Why I took this trade, and what did I learn? So again, now that we had the buy side get hit and it ran down below this low, and then we're respecting this gap right here, my thought process was, okay, saw liquidity here. We now have a midweek reversal, which means that Wednesday or Thursday can potentially make the high of the week. In this instance, it would have been Wednesday for me. And so I was looking for shorts on Thursday specifically. And then this is what we got. This is what happened. So traded up into this fair value gap and looking down there. Didn't quite get there, but that was at least the bias for me on Thursday. Why did I take this specific trade? And where did I enter and all that type of stuff? So for me, I saw this fair value gap. There was no displacement here. So we had London low. I would have liked or rather been up in here, but I explained why I was not up there because this is not the first presented fair value gap. If it was, I would have been there easily and brought it all the way down, but that's not my model. What I was waiting for was the first presented fair value gap to form, which was right here. Now, I don't specifically enter on the first presented fair value gap. This just happens to be there. I just like to see it form. That's my waiting mechanism because it tells me if it's taken late to form, I have to be a little bit more cautious or could expect more drawdown or more deeper retracements then. So I entered as soon as it came up into this fair value gap right here. I didn't expect it to hit the London low because the books teach us that it reacts off old highs and lows and all that type of stuff. So I was expecting it not to come up there. So my stop loss, I almost got stopped out in this trade and I just happened not to. I got very lucky with where my stop loss placement was. So traded up in here, ended up trading down, and took out where I was expecting price to go to, and it was a lovely trade. Now, what did I learn? If you listen to the live stream, you'll hear me struggling because I'm trying to watch the chart, but I'm also trying to have my levels out because I didn't have my levels below this low. And that was very concerning because I don't know where it could reach below this low. And I don't want to just randomly put my TP somewhere. So what I learned was everywhere I think it can go, and even the farthest extreme I think it can go, I need to have the midnight opening range. That's what I use in terms of targeting purposes. 2 levels below is how I usually do it. So I didn't have the 2 levels below. So I quickly put them on and I matched it up and it hit my level. If I didn't do that, would not have hit my take profit. So that's what I learned. And from now on, that's what I do. I make sure I have the levels below each and every one of them on a separate screen. January 9th, 2026. What was the daily bias? Why I took these trades? And what did I learn? Okay, so again, I was looking for a midweek reversal, which means Thursday lower. And I was thinking also Friday lower. That was my thought process. We're going to see what happened. Yeet. It went higher. It didn't go lower, and that's okay. These were the trades that I took. I took 3 trades, and the first trade I took off of was this fair value gap here. It was a 1-minute fair value gap. Initial reaction good, and then got ran through. So I was like, okay, it's going to go up to the 5-minute gap that was there. It traded up to the 5-minute gap, ran through that a little bit higher to a 15-minute gap. After I had taken 2 losses, I'm like, okay, I need to wait. I need to demand it to show that this is a level it wants to run away from, and it did there. So it created a fair value gap. So I entered off the fair value gap as it traded up into it, came up, and so I had my stop loss up there. It came up and stopped me out and then did this, and it didn't even go as low as I would have expected anyways. That's why I got into those trades. Now, what did I learn? I want to go back to this chart right here. When you hear me during the live stream, I'm watching this on the 15-minute chart. I'm like, the 15-minute chart looks crazy wicked with these wicks, right? It doesn't look like it wants to go lower. It looks like it actually wants to trade higher. But for me, I was still locked in with this, thinking I'm like, this is just so clean. And you have the new week opening gap here. They're going to at least come down here and try to tag that, which obviously they did not do. So for me, my learning aspect in this trade is like, even though I saw those down there, what is actually price telling me? Because I try to become an observer of price and not just try to demand or say this is exactly what's going to happen. So for me, observing, when I realized that, is like either I need to step away and not trade anymore, or if I can frame something that makes sense going to the upside where I have levels there, then I can engage in that. If I'm telling you there was nothing there for me on a buying opportunity, there is nothing inside of this for me. Now, there are buying opportunities on a 15-minute chart, 5-minute chart, but I wasn't there and I really wasn't that interested. Here is the week. So the first trade, I lost $308. This is way too much for me to be losing on one trade is what I mean. So my max is $250. So this is obviously $58 over. That's not good. To realize that and understand that, and that mistake will not be made again. The second day, $133. The third day, $395. The fourth day, $491, and then Friday, minus $174. So with a week of $536.92. I have 2 accounts, so I made $1,000 this week. Pretty happy about that, pretty excited about that, and gonna continue to move forward on. Again, thank you guys for watching this. I appreciate you guys that made it all the way to the end of the video. If you like this type of content, please like, comment, and subscribe. Let me know how you guys did this week, if there was anything that you saw that was hard or challenging, and maybe I can help answer some of those questions. I am going to be starting a Discord soon, and it's not going to be like your normal, hey, we just make money and stuff. I don't want that. That's not what this is about. This is more about a holistic approach to trading. Your mindset, what you're eating, working out, are you reading, and just holding people accountable, including myself. Like, I am not out of this either, because I've realized when I started to do those things, the payouts and the passing of the accounts came after I started doing the right things. And I was doing my daily updates, being held accountable. And some people may need help with that. And so I don't know when all this is going to be rolled out, but I do want to introduce it now. And if that's something that you're interested in, please let me know, and you can reach out to me and we can see how we can work together if that's something that you want to do. I love doing this. I hope you guys enjoy this. Remember, Jesus is King and he loves you. All right, peace out.